ผลการดำเนินงานประจำปี 2565 และไตรมาสที่ 4 ปีเดียวกันนะครับโดยในวันนี้ผมขอแนะนำผู้บริหารที่จะมานำเสนอผลการดำเนินงานและตอบคำถามนักลงทุนทุกท่านในวันนี้นะครับท่านแรกครับท่านดำรงตำแหน่ง Group CEO นะครับคุณเควินนะครับคูมาชามานะครับท่านที่2นะครับวิชาลอากาวาลนะครับท่านเป็น Group CFO นะครับของบริษัทนะครับครับคุณวิชาล please
สวัสดีครับ Good afternoon everyone. My name is Vishal and I am the Group CFO for Thai Plaspac. I welcome you all to the opportunity day for TPAC for Q4 and full year FY22. Yeah, I hope my presentation is available and is on the display.
Yes.
Okay, thank you. So good afternoon once again, my dear friends, shareholders. We welcome you all to the opportunity day for Thai Plaspac. Today, we are going to be covering 3 sections in our presentation. Many of you might already be familiar with our company, but we would like to spend few minutes to give you an overall view of the company in the first 10 minutes. And then we would like to take you through our journey, which is an interesting one over the last 3 decades and last 6 years with the new shareholders coming in, and also spend some time to give you the growth strategy of the company. And finally, we will end the presentation by giving few highlights of the financials of the last year and last quarter, and some key business highlights and updates for yourself. So this is TPAC. We take the pleasure in introducing you TPAC, a packaging solution specialist. I think so. Who we are a company which is into a space of rigid plastic manufacturing by far as the main core business, and everything that we do, is built on a very, very strong design and R&D lab, which is the backbone of our investments. We are present today in 4 geographies, but in all the markets that we are present in, we have a leadership in the niche segments that we are present. One of the interesting points of our company is that we have consciously taken a choice to have our portfolio more than 90% only catering in the food and beverage and pharma segment. And this is because this segment requires a very high degree of strict hygiene and clean room, which makes the entry barrier into this business much stronger. We while we have been growing at one of the fastest pace, we have been very, very mindful of our commitment towards the environment and climate. And that is the reason we have taken a conscious choice to only deal 100% monolayer recyclable polymers, which is PET, PP, and HDPE. And that's our commitment towards our sustainability, a sustainable environment, and which will remain the bedrock of our future growth also. One important point is, as we look back for most of the things that we do, and we do that with pride, it has led us to be the fastest growing packaging companies in Asia, which is something that you will see when you reflect upon the numbers that we have delivered by the virtue of being very, very focused, very, very diligent, and very, very agile. This slide gives you a picture of how we are present and where we are present. As you can see, all the orange color is representative of the geographies where our products are going. We are today serving almost 50 countries with over 1,500 customers. The green picture reflects the areas where we have our manufacturing operations. We have overall now 16 plants globally, with 4 plants in Thailand, which came in through the initial days, and then all the other plants by and large, coming through our inorganic expansions into new geographies. In terms of how we are spread geographically revenue-wise, today Thailand accounts for almost around 30% of our top line, whereas the 70% comes from overseas, with India accounting for a giant share of almost around 45 to 46%. What's important to note here is that this picture that you see here, in the last 5 years, we have quintupled, that is 5 times grown our manufacturing locations to 16 plants, and keeping a very, very strong focus towards emerging markets, which are having a higher growth rate as far as consumption is concerned. This slide basically will give you a picture of how we are, the different technologies that we are operating in. And this is important because for a layman, when one wants to understand this business, one of the key USPs and differentiating factor for any company is the breadth of the technology and product line that they have while serving to their customers. So we are proud to say that when it comes to rigid plastic manufacturing, we are amongst the very few companies who has the entire spectrum of technologies and product base, which can go into the making of rigid plastic manufacturing. We are dealing from PET preforms, which is a single, which is a part of a 2-stage process of making plastics. We have extrusion blow molding for more rigid plastics that is required for personal care, for pharmaceuticals. We have injection blow molding for high precision products. We have in-mold labeling, which is a new competency that we acquired through our acquisition in Malaysia, and a recent addition that we have done in terms of paper packaging. All the green dots are where these technologies are already present, and all the orange dots are basically the places where a lot of these competencies are actually getting built through our post acquisition. And that's an important part of how we are driving our synergies as we go around acquiring companies. This is a bit of a deep dive to the point that I made earlier, where I said 90% of our portfolio is focused on food, beverages, and pharmaceutical and personal care. Even within this segment, we are having a very, very laser sharp focus to operate under the sub segment categories, whether it is condiments or dairies or confectionaries, when it comes to food, or liquid formulations, and a very interesting new area of intravenous drug solutions or nasal drug delivery solutions. The reason we have built this portfolio is also related to the fact that some of these segments are going to see a very good growth in times to come. And we want to make sure that we are ahead of the curve in choosing our product line, which is going to continue to remain resilient as far as demand is concerned and show a sharper growth and uptake in times to come. It's also is reflective of the fact that, all of these portfolio that you see here, we got severely tested in COVID, where we did not have much of demand shrinkage, because these are everyday items which continue to be used by consumers irrespective and does not have any cyclicality attached to their usage. Well, this slide is a clear reflection of how the manufacturing platforms that we guys operate and work to build all of these products that I showed you. As you can see, automation, a clean room are the foundation on what all our manufacturing facilities are built on. One of the important parameters that we look at when we choose any of our technology partners is that, there is almost a no compromise philosophy, and we do not compromise on picking up these vendors. And then logos that you see on the bottom right are representative of the best in class from across the globe in their stream of technologies. And these have been our partners for decades together. And we have always made sure that all of our manufacturing processes are built with these platforms, and we have the best-in-class services also that they offer as integral partners to our business. And then on the bottom right left is the host of certifications which basically are a testimony of the strong audit process that we go through, either through our customers or on ourselves, to make sure that we bring the best quality certified products to our consumers. This slide, with a bunch of logos is very self-explanatory. We have been serving the blue chip customer base across all our segments in almost 50 odd countries. A lot of these relationships that you see with pharma giants, MNCs, and food giants are something that are spanning over last few decades. And that's where customer stickiness is one of the very important elements of our business. It takes time to build these relationships, but once these relationships are there, as long as you continue to serve the customer with your new designs, with your continued delivery and quality parameters, we rarely see a case where we lose such customers to any competition. And that's one of the important fulcrum of our business in terms of the continuity of our customers and continuity of our revenue streams. What's equally important is the fact that we try to not get ourselves completely hedged on few customers. So we try and maintain a low customer concentration so that our business is not directly affected or impacted by any movement of a business loss or a change of our customer demand going down, completely affecting our business. So we are very conscious in keeping a very moderate customer concentration across our 4 geographies that we operate in. This is something that we spoke about in the beginning. Our approach to our customers is not through vanilla products. I think one of the key differentiation that we bring as a supplier to our customers is the depth of design knowledge and expertise that is there within our group. So we approach every customer requirement as a design problem and try to come up with an innovative solution, backed by a state-of-the-art design lab, led by a global expat with 3 decades of industry experience in managing R&D functions of big enterprises. So this design lab is the backbone for all our products that come out, and we make sure that it is this innovative design, whether it is in the form of weight reduction to help our customers meet their sustainability requirement, or a unique design which makes their product appeal better with respect to their competition. All of this is what keeps us in the front runner of the preferred partner of our customers. What you see on the right hand side are just some examples of such design, whether it is the nasal spray 3-piece system or a Julie confectionery biscuit, where we replaced a tin packaging with a very luxury appeal IML biscuit container, or a temper evident infant nutrition scoop enclosure. All of these are just few of the multiple such products that we have brought out over the last few years. And then finally, whatever we do, as I said, sustainability is, we keep that at the center of our focus. It's not a challenge for us, as many see. Rather, we see it as an opportunity. It's an opportunity for us because of the choices we have taken over the years. The choices to remain and deal only with polymers which are fully recyclable. The choice to only deal with monolayer packaging and not get into multi-layer. And that's the reason we have shied away from flexibles, even though there were many opportunities. And what you see here as around 1, 2, 3, 4, 5, 6 are initiatives that we have been doing with our customers at different stages of evolution towards our sustainability goals. And the beauty of this is that it not only adds to our commitment towards this important aspect of business, but it also becomes a differentiator with our competitors when we are dealing with our customers. So whether it is about some of these projects include, converting the customer from a non-recycled project polymer that they were using earlier. For example, for one of our customers, they were using a very, very known product or a brand in a PS material, which we converted into PET for them. And with the customers were having a lot of concern on how the physical parameters, the strength parameters, the look, appearance would change basis this shift from PS to PET. But we allayed all of that for them and made it a successful product conversion. Whether it is about weight reduction projects that I've already spoken about, whether it is also about now increasing the contribution of recycled PET versus virgin PET in their projects. So that's also a very big opportunity that we see. We are rather provocators to our customers to use more and more of our PET for their products. The current infrastructure is not such that it has reached that scale and size, but we definitely believe that the contribution of our PET in the overall usage will continue to increase. And very interestingly, we have been also now experimenting with certain bio solutions, which are at early stages, but we hope to commercialize it also soon in times to come. Now, all of that I spoke about, whether of our customers or products or R&D or sustainability focus, the derivative and resultant of that is in front of us in terms of the fastest growth that any packaging company has seen in the last 5 years. So this graph shows that we have not only grown our top line, but we have grown our bottom line even at a faster pace. And that is what makes us say with a lot of confidence that we are one of the fastest packaging companies in Asia, if you look at it from a last 5 years perspective. It's not just what we have done. I think the most important part is what we intend to do. And here in front of you, we guys would like to say that this is a title that we would endeavor to keep even for the next decade. We hope and we believe that after 10 years from now, after 5 years from now, we can come to you and repeat the same testimony of being the fastest growing packaging company in Asia. So this was all about who we are. And now let me just quickly take you through how we are, how our journey was. So this is a quick one in terms of where the world was before and where the world has changed for us. The world here refers to the era where before the new shareholder came in from 1983 to 2015, and the world after that is from 2016 to 2022. A company which was Thailand originated, limited to kind of exports to only 8 countries. Post the new era of new shareholders, new management coming in, today is serving 50 odd countries with presence in 4 geographies. 3 plants became 16. We almost tripled our revenue base from 900 employees to now 3,000 employees across different regions globally. We have already spoken about the growth in top line and bottom line to the extent of 4x. We were listed on stock exchange of MAI. Now we are on the stock exchange of SET. Our CG ratings also improved drastically from 2 stars to now 4 stars. And while we have kept our food and beverages focus, we also extended the same to pharma, which also requires the strict hygiene and cleanliness. And all of this, one integral part of this growth was all the M&As that we have done. So as you can see, we have a very, very strong and credible history of doing M&As, the TPAC way of doing M&As. So we have done almost 5 M&As in the last 5 years, averaging 1 every year. And this is something that, we believe we have mastered the way of how we partner with the right mindset people and also, in terms of drawing synergies post our acquisition. This graph, is basically to give you a view of what the worldview is about plastics. So We do believe that plastics is here to stay. We have to be more responsible in the way it is being consumed. But as you can see that we expect the plastic consumption to go up from 460 metric tons to almost 1231, which is almost 3 times the growth. The most important part here is the geographies which are going to grow the fastest, which is India, Asia, Middle East, and Africa. And these are the geographies where TPAC is present the most in the most strongest way. So what is the growth strategy going to be over the next 5 years? So as you have seen, we will continue to keep our focus for the next 5 years on the emerging markets. There is enough to grow there, enough to expand. India is going to be an important geography for us in terms of the size and the scale of play that we can do. M&A is going to be a continuous engine, and value creation through synergy, as we have seen, of how do we leverage on one acquisition and bring the best of the other geographies into it, and likewise is something that you will see as a trend going forward. And finally, you will see also a shift of our product profile to move more and more towards more higher value added products. This is just elaborating on these 5 points that I said. The 3 geographies are Africa, Middle East for us as one engine, India as another, ASEAN as the third one. India, it's a country, it's a world in itself, right? So today we have 9 plants in here, leadership and PET segment. Last year we also incorporated a new company called Custom Solutions to get into new specialty verticals. We believe that India not only can be a huge opportunity to serve the local consumption demand, but can also be a mega factory to serve and export to the world. And we all know about what India Pharma has done to the world. And that's one segment where we are very, very closely entrenched. So all in all, we believe this has a great potential to drive scalar growth for the group. This is TPAC's unique culture of what I mentioned, the TPAC way of doing things. We love the photograph on the top left. It is all nationalities, all geographies, all together at one place. That's what TPAC is. It's the best of all worlds coming together and then working towards a common goal. And that is what our M&A strategy is all about, other than the mechanics of ensuring that we deliver high ROCs on our investments. We have a very, very solid integration plan that we think through even before we acquire the companies. And most importantly, the most important factor which differentiates us from any other bidder is that we become the most preferred partner to the family-owned businesses, even if there is a competing bid higher than us, because of what we bring to the table in terms of the right familial values coupled with a professional culture. What you see here is how all the crisscrosses is how one technology from one geography got exported into other geography, and that's where we have been creating value. It's about creating that alpha, either through customer relationships or through technologies, or purely leveraging our global design capabilities. This is to speak about how we are moving up the chain of our product profile. The new company that we are setting up in India, we are very excited by certain new segments that we are deeply analyzing and exploring, and mostly will be entering soon, whether it is on the high-end closures or cosmetics. And these are segments which will elevate the overall product profile of the company from our current base. So this was our journey, and this is how our growth strategy is built in the next few years. Very quickly, I'm sure you have seen these numbers. This is FY22 was a year of transformation, I would say, for us. In spite of all the uncertainties, inflationary environment, we have touched an all-time high revenue and profitability. This is the first time our EBITDA has crossed 1 billion Thai baht, registering an 11% growth over last year. Our Q4 was equally strong. Rather, our Q4 annualized crosses our annual EPS today. We believe the next few quarters should see a similar momentum as we continue to expand and enter into 2023. It's not just about revenues and profitability. We have also been generating a steady, strong, growing stream of operating cash flows, and it's to a credit that even after a lot of investments that are going into either organic initiatives or inorganic initiatives, we have kept our net debt to equity almost constant over the year, and which gives us with enough room to be able to further invest and grow the business. I think this is an important part because, we have, every one of us have been talking about it and seeing the cost pressures, the inflationary environment, whether it came in the form of energy cost, manpower cost rising, or interest rates spiking. The fact that we at TPAC have a very, very agile management team and a very, very strong customer intimacy. This allowed us to act very swiftly in this uncertain rising cost environment, and even being able to pass some of the cost price increase to our customers and undertake a very rigorous cost optimization measures. And that has led us to maintain our profitability and even grow in this current environment. I think just to end it up, it's some of the important development that we saw in the business included our big move towards sustainability by installing a mega solar rooftop project in our Malaysia business. We finished expansion of our 2 greenfield projects, which have been going on for more than a year in India. 2022 saw a very increased and elevated level of customer engagements. We participated in global exhibitions where we could present the unified TPAC to all our customers. We incorporated a new company in India for specialized closures and new verticals, which I refer to as value-added products. And we, 2022 also marked our foray into paper packaging, which also, is a testimony of the company, because with no such expertise in past, we could manage to come up with this new technology at the backdrop of our customer requesting for it. So in summary, what is TPAC and who is TPAC? TPAC, you are talking to the Asia's fastest growing packaging company, listed on Stock Exchange of India, Stock Exchange of Thailand. We are market leaders in the markets that we are focused in. We come with multi-decade relationships with blue chip customers, very, very focused in what we do on specialty packaging. Differentiators are through the design and clean room that manufacturing platforms that we bring. Very importantly, we operate in a non-cyclical and a very, very demand resilient business, which gives us comfort on future streams of revenue. And there is already a track record of us delivering it over the last 5 years of 3 times growth in EBITDA. And sustainability will be in everything that we do and everywhere we do. With this, I thank you all, for this presentation, and I open the floor for questions.
So, Vishal, we have received some questions online. I think these are quite interesting questions. Good afternoon again to everyone. Thank you so much for joining us. So, question number 1 talks a lot about our. We've had a lot of sort of exponential growth over the past 5 years, largely due to M&A. We would like to know if the current capacity itself can now really can TPAC deliver more organic growth in the next 3 years, or will lots of investments need to be made in new factories and in more infrastructure? So one thing I would like to share is that TPAC in the past did not feel comfortable to enter into new geographies organically. I didn't believe that we had the team, the management, the capability, the experience to move into new geographies organically. But the one thing that has now happened over the past 6 years is that today I have an amazing team. And I feel that we are now very well prepared to also enter into a geography which we have no experience in, but enter into that geography organically and begun taking market share. So let's see. Let's see what happens there. But what I am hopeful of is that we also begin entering into new geographies organically. That's one. Another thing I would like to add is that take a geography like India, a geography like Malaysia, even the Emirates. Once we get into a geography like, say, India, we did it inorganically. So, we paid a price. We are very happy with our ROCE on our investment. But nevertheless, now to really, really drive that ROCE, to really drive that investment, we need to be delivering very strong organic growth to turbocharge the returns from that investment. And again, today we have the team now. We have the team on the ground that is trusted. And there's a good understanding between us now. We have the customer base that increasingly is also appreciating the professionalism, the speed, the flexibility, the transparency in the TPAC way. So the know-how is there, which is why we built 2 plants that just came on stream in the past, few weeks or couple of months organically. We would not have been able to go into India in the past without an acquisition and build 2 plants, because we didn't have the customers, we didn't have the know-how, we didn't have the team, we didn't have many things. Today we have it all. So 2 large plants have been built. We are today, from an infrastructure-wise, very well equipped to really drive organic growth now, because those plants have been built and are complete. We incorporated a new company, TPAC Custom Systems, to focus on a few specialized projects in caps and closures or maybe cosmetics. So we've set up a new company. We've built a team from scratch, an entirely independent new team that will run this new vertical. We will soon hope to share the infrastructure for this investment. Also a new plant. So the point I'm making is that today we have good knowledge, we have a trusted customer base, and we have a very able management team. So I hope to take advantage of all of this by really driving organic growth initiatives and sharing these with you in the future. The next question, I hope that answered the question number 1. The next question we have is, do you foresee this year to be the best year of TPAC by far in terms of revenue and profit? Now, Vishal, you probably are not comfortable me sort of answering this question or giving guidance, but is there something we can say here?
Yes, Kevin. So yes, I mean, as a policy, we avoid giving any forward-looking guidance. But yes, Kevin, I think to our shareholders, dear shareholders, we can definitely put
I think-
put a view
sorry,
of
I
what
think-
we
I
believe.
think-
Yeah.
I think let me just add, we are today Asia's fastest growing packaging company. We keep looking at data. We don't throw out a statement like that lightly. We don't want to lose this title.
Right.
We don't want to lose this title. Our business is strong. Our business is healthy. Our management team is strong and only getting stronger. And we don't want to lose this title. So we are hopeful that what we did in the past, we will continue to do in the
Absolutely.
future.
Yes. And it's going to be a strong endeavor to replicate our past, is what we can tell.
Now we are coming off a higher base. We are aware of that, right? That base number, that base EBITDA number is higher. But so is our balance sheet. So is our capability. So is our balance sheet. So is our management team now has more depth. So we feel quite confident that we will continue to hold on to this title of Asia's fastest growing packaging company, and more will take notice
Right.
as we
And
continue
what
to
we
deliver.
would like to also iterate is that there are no dearth of opportunities. So opportunities are not at all vanishing for us, right?
So this comes to another question. Do we have ongoing M&A that might be concluded in the near quarter? So we can't talk about, when things get concluded. But what I would like to say is that M&A is just very much part of our DNA. We always have opportunities in various stages. It's just part of who we are. It's part of how we do business. There is a golden opportunity, we feel, this next 10 years to really create value by M&A. And in 10 years' time, maybe in 15 years' time, or the landscape will be very different. But we are here today at a point in time in our history, in ASEAN's history, in India's history, in the Middle East and Africa history. And there is a tremendous opportunity for very strong value accretive M&A that doesn't exist in Europe, that doesn't exist in America, we don't believe, but it exists where we are, and we have a comfortable 10 years of very exciting M&A opportunities. And I want to add to another point that what Vishal spoke, because this is not a trivial point about us being the preferred partner to family businesses. Asia, these emerging markets where we are, there are many tremendous businesses that are owned by families. Today, they're coming to the second generation, maybe the third generation. And these businesses, it's very emotional. The idea of losing control. You can take a look at our M&A track record. All of our M&A has been with acquiring majority stakes and partnering with family businesses where they are holding on to the minority. All of them, except TPAC Packaging Bangna, which was our smallest M&A. But besides that, all of them have been acquisitions of, even Bangna was an acquisition of a family business, I should add. So all of them have been acquisitions of family businesses, and they have chosen us to be the partner that they really want to engage with in a serious way. Because there is a real value match. They are comfortable with the mindset that we bring to M&A. They are excited by how we will work with them day two. So the fact that, and there is no stronger advertisement when we tell a potential partner, why don't you go talk to our past partners? Why don't you go talk to our other families that we have partnered with? ask them what has been the experience working with TPAC. And that really is our strength. Today, we have, as we have got no shortage of families that are calling us up, sitting opposite the table with us, really keen to explore whether they could also become part of the TPAC family. So, yeah. Do our customers have high switching cost in terms of changing suppliers from us to others? Certainly they have high switching costs because we shall have our investor base come over to our shop floor. Hopefully we can arrange something like that to give our investors a better picture. But yes, absolutely. Number one, these are critical products where hygiene is critical. And number two, it is not so straightforward to make 6 million pieces a month of a say a yogurt cup or 10 million pieces a month. There are just in every country, there are probably just a very small select range of parties that are well equipped to do this. And all our products are customized in nature. So customized in nature mean they may also have a customized automation to take the product out, to pack the product. The molds, how the molds are maintained and the peculiarities of the mold. These molds are also manufactured with our partners. We are very involved in the mold manufacturing process, and so we also understand how to maintain the molds. So it's not which is why you will see in TPAC's history, I personally am not aware of any scenarios where a customer is switching, is taking a mold from us and going to someone else. Because as I say, you don't, there is a lot of specialty capabilities that go into smooth production. What our customers want is a reasonable counterparty, absolutely reasonable on price, transparent, and very importantly, reliable, able to deliver millions and millions of pieces a month in a reliable way. Is the key.
Yeah, even for us, we don't build these new relationships overnight. They get built over a period of time where we work with the customers, get ourselves approved, certified, and then only we are in a position to be their long-term suppliers.
Yeah. Just we only have 2 minutes left. I would also like to tell our investors that absolutely we will now be more regular with these opportunity days. We haven't been so regular at it. I take responsibility for that. That will change. TPAC needs to engage in a much more mature way. We give you our commitment that we will certainly be doing that. We'll also tell you that our future opportunity days, we will also have a combination of Thai and English. Apologies for today that it was only in English. One last question is,
I think on that note, Kevin, we are also open and we welcome any investor who would like to engage with us separately also and seek a meeting with the management. We are very open for that.
Yeah. And there's a final question, Vishal, on utilization rate in each country. I think we can say that Thailand has probably got one of our more muted utilization rates.
Yeah, that's right. So yeah, I mean, while this is not an exact data that we are giving out publicly, but yes, to Kevin's point, you can say that Thailand has still some has room for growth,
Yes,
right?
yes.
We
15
we
seconds.
we are more at around 50 to 60% utilization, but all other geographies would be at respectable rates. We continue to invest and grow, but we are ready with our manufacturing platforms in India with the 2 new factories coming on board, which is a good, very positive sign.
Okay, I think the time is left now, and we can say goodbye to investors.
Yeah, sorry we didn't get to answer all of these questions. Apologies. Thank you so much, everyone.
Thank you so much.
Thank you so much.